Good afternoon, ladies and gentlemen. We are about to start the webinar. So request all the guests to please put your camera off.
Camera off. Okay.
The speakers can be putting their camera on. Yashish.
Understood, sir.
Understood.
Ladies and gentlemen, please give a warm welcome to Ms. Shant Fisher, the CEO of the Chartered Insurance Institute. She is the CEO of CII since February 2016, following a distinguished career in the insurance sector. A graduate of Oxford University with an executive MBA from Harvard, Shan is a strong advocate for equality. Over to you, Shan.
Thank you very much, Yashesh. I'm absolutely delighted to have been invited to welcome you all to today, both speakers and participants. I'm actually joining you from a roasting hot UK, very unusually, and we've actually been experiencing some Mumbai-style rainstorms as well. So you may be able to hear the rain outside while I'm doing my opening remarks. And I have to start by saying that in very difficult times, I very much hope that you, your friends and family have all managed to stay safe and well. We had obviously wanted to do this event face-to-face some months ago in Mumbai, but given the continuing COVID uncertainty, we've decided to adopt the new normal and do this event virtually. We are very, very grateful to all our eminent speakers making the effort to join us today and to share their unique perspective and experience of insurance in general and obviously the motor sector in particular. We all know that motor is, in most countries, is the largest GI class. And also in most countries, it's one of the very few compulsory classes of insurance. So you could say that in some ways motor has a charmed existence. But this can bring with it the danger of complacency and not keeping up with changing consumer needs and consumer expectations. So we hope that this event will create a platform for the leaders of the insurance sector in India, firstly to show their commitment to present customers, but also to future customers. Their ongoing trust requires transparency, professional standards, and innovation. And I know that we're going to hear a lot about all of these things from our fantastic range of speakers today. So without more ado, I'm going to hand back to our wonderful moderator, Yashesh, who will introduce you to our first speaker. Thank you very much.
Thank you very much, Shan, for your kind words and a great welcome note for the audience at large. May I request another eminent speaker, Mr. M.N. Sarma. He is the Secretary General from the General Insurance Council. Before joining the GI Council, Mr. Sarma is a renowned personality from the insurance sector in India and has worked as Chairman cum Managing Director of United India Insurance Company Limited. Mr. Sarma would be talking and giving a brief overview of the current motor insurance scenario in India from a regulatory perspective. Welcome, Mr. Sarma.
Yeah, good afternoon, everyone. I'm M.N. Sharma. See, the insurance industry, particularly the motor insurance industry, is the dominant sector in the entire non-life insurance segment in India, the motor. And out of that, the motor third party, which is the compulsory insurance, takes the larger cake. Last year, out of a total premium completion of 1,69,000 crores, nearly 70,000 crores. That is about 69,000 and odd crores. Crores of rupees have come in from the non-life, from the motor sector. Out of this, around 20 odd crores came from the uh, out of that 20 odd crores came from the hello, am I audible?
Yes, Mr. Sharma, you are audible.
Okay. There's some disturbance, that's right. Okay. Almost about the 20,000 crores came from the OD segment. This is the OD segment, whereas the third party compulsory insurances yielded about 40,000 crores roughly in the previous year. Whereas in the current year, we see because of the lockdown, there's been a big dip in the motor overall premium rates, overall premium completion. Many people are still not taking their vehicles out, and probably that is why they didn't feel the necessity for insuring their vehicles. So that is why I think we are not seeing still a big growth in the motor. In the month of June, I just came to know that in the month of June, just now we entered the a positive growth figure. But then overall, if we take until June, the first quarter, we are minus in growth of motor premium. The motor sales also, the motor vehicle sales also are registering a continuous downtrend ever since the beginning of last year. Every year, the motor premium, every month on month, the motor premiums, but the motor sales were coming down, and consequently, the motor premiums are also getting down. This is one aspect of it. Whereas, and in a reducing size of the cake, the market, the companies also, we have a cutthroat competition here, and we find each one vying with each other and then giving them more and more discount. And as a result of that, the premium. May I request those who are not speaking to mute their mics?
Requesting the guest to please put. Requesting the guest, please keep yourself on mute. Our speaker is getting a little disturbed. Mr. Sharma, can you unmute yourself from your end?
Hello.
Thank you, Mr. Sharma. You are audible now.
Yeah. Oh, sorry. I was telling that in a scenario where the vehicle sales was going down month on month from the beginning of last financial year, that is 1920, the market haven't grown much. The new business wasn't growing much. Whereas for the existing business, and since there were nearly 25 companies in the market, and they were vying with each other and then offering discounts and too many discounts. And consequently, the total premium was registering a reduced growth. And that we were able to see it in the first few months of this quarter, mainly because of the pandemic and lockdown. But otherwise also the business is on a very low key for the motor. motor has been a dominant sector, occupying almost 40% of our market share in the last financial year. And this year, it has been overtaken by the health business, partly because of the pandemic and partly because of the reduction in the motor premium, overall motor premium. And since I'm asked to speak from the regulator's perspective also, I just want to also say that the cutthroat competition among the insurance companies here has led to seeking tie-ups with the original equipment manufacturers, the companies, the motor vehicle manufacturers, and they were able to extract their pound of flesh by seeking concessional discounted rates and higher commissions, higher incentives to their dealers and all. So that is how the business has slightly shifted in favor of the original equipment manufacturers who are able to dictate terms. And the regulator isn't very happy about it because if the portfolio is performing well and then earning any profits, normally the regulator would like these to be rewarded to the customers by way of lower premiums, not by maintaining the same premium rates or increasing the premium rates and making more payments to the intermediaries. So obviously that is not liked by the regulator, and regulator has put in various measures to control this situation, and they are grappling with the situation, and hopefully there can be some correction in this going forward. The in the appointment of surveyors, and also the competition has resulted in too much competition has resulted in a lot of privileges being ceded to the dealers, motor dealers. So it is the motor dealers who take call on who to be appointed for the survey of the vehicle and of the accident vehicle and all that, and consequently the surveyors' loyalty also is more towards the dealers. And tomorrow you might possibly ask me, then what if the surveyors are appointed by the insurance companies, could the surveyor loyalty be to the companies? No, it's not. But here, it is between a company, an insurance company, which is owned by a large majority of the people. If it is a listed company, of course, the whole public, and otherwise it's huge groups of companies, and no individual employee is the owner of the company. In no significant ownership is there. So consequently, in appointment of surveyors and all, only efficiency is counted, and nobody gains in this. I don't see any wrong things here happening. Whereas the dealerships, mostly they're all either family owned or individual owned. So there can be pressure if any amount gained by rightly or wrongly will go to the personal benefits of the dealers. So possibly the shifting of the authority from the insurance company to the dealer about the appointment of surveyors and is literally giving control on the claim assessment to the dealers, motor dealers. So this is also not really liked by the regulator. So they wanted a more a balanced controls on everybody. And if at all any benefit arises, that should go back to the customers by way of reduced premiums. That is the aim of the regulator. So this is what all I have to say in the beginning, and as the webinar proceeds, you can call me later.
Thank you, Mr. Sharma, for giving a very good perspective on the regulatory side of the insurance business. I would like to now welcome our another eminent speaker, Mr. Nilesh Garg. Mr. Nilesh Garg is the CEO and MD of Tata AIG General Insurance Company Limited since 2015 and has been instrumental in driving the company's growth and the development in the general insurance sector. Welcoming Mr. Nilesh Garg. He shall be talking on the challenges faced by the insurance companies pertaining to the motor insurance in India.
Good afternoon. Good afternoon, everyone. My congratulations to CII for putting this wonderful online event together and bringing in a very, very esteemed audience. Rashish, am I audible?
Yes, Nilesh, you are audible.
Nilesh, you are absolutely audible, but a bit of a request to everybody to kindly go on mute because, we all have a bit of background noise and that will keep coming all the time. So Nilesh, absolutely audible. Yeah. Thanks.
Thanks. So I will, I've been given about 10 minutes. I will try to stick to my time and try to take you guys through some of the challenges which is being faced by motor insurance segment. Motor insurance segment, as we are all aware, is, has always been the foundation on which the entire industry has been standing. It has been taken, it's always been about 44-45% of the industry. But over the last few years, we've been seeing it coming down very gradually and also driven by significantly increased penetration of health insurance. So motor insurance, now from about 44-45% seems to have come down to about 37-38% of the segment. Right now, obviously, motor insurance is in very, very turbulent times, both in terms of vehicle sales, claims. There are various challenges. If I were to break up the motor vehicle segment, motor insurance segment into three sub-segments, two-wheelers, passenger cars, and commercial vehicles, which is trucks and three-wheelers. My comment would be, that what we are seeing in the last 4 months right now, we are seeing a very good, sharp, V-shaped recovery in two-wheeler sales, as well as the affordable segment in passenger cars. But the two problem segments continue to be the commercial vehicles. Commercial vehicle sales is linked very closely to the economic development, GDP of the country. So that's something which continues to be very slow recovery. And the second thing which is also very slow recovery is the discretionary sales of passenger cars, which is the premium segments. So which, one could say probably is the ticket sizes, IDVs greater than 8 to 9 lakhs. So we are faced in a situation, wherein, there is a significant slowing demand. To compound the problem, what is also happening is, there is, because the 3-year third party and 5-year third party for passenger cars and two-wheelers has been made mandatory. So this is also affecting the OD, motor own damage penetration, especially in the two-wheeler segment. So with the result, what we are seeing is, while the composition of the segment, motor insurance used to be 55% own damage and about 45% third party, that now is moving to 35% own damage and 65% third party. Why this is so important in terms of the challenges, and I would say argue, that probably one of the most important aspects is because the way all of us understand own damage, I don't think enough of us understand third party well enough. And that has become the biggest risk for us to understand. And the reasons for that is, third party is very, very long tail in nature. Third party is very, there are a lot of frauds, infested with a lot of frauds, that it's prone to frauds. And the entire mechanism of this happens, as we are all aware, through a mechanism called, MACT. So I think that is one very big challenge, for all of us, because of the long tail, things don't show up in 6 months, 1 year, 2 years, or even 3 years. And hence having a very strong actuarial understanding, to understand the long-term trends is extremely important. What is also happening is, in terms of the wage inflation, what is happening in India in various states, districts is again, something which is extremely important because that is getting directly linked to the awards amounts. And similarly, what is also important is, there are a lot of these landmark judicial cases which change the basis on which, the awards are given. So that's one of the key challenges which I see. I don't think there is enough understanding. And in case one needs to have a very strong understanding of the third party long tail business, for us to make, continue to make sense in this business. The other thing, which I would like to say is, third party, a lot of people take comfort in the fact of investment income. Now, and one of the things, which all of us are aware that most of the companies, insurance companies worldwide, which have had a problem because of investment incomes and not their core underwriting portfolios. So, and even in the recent pandemic in India, we saw the kind of volatility which investment portfolios of companies were subject to. Some companies even had their solvency ratios affected because of that. So the point, I want to reiterate is, motor third party is something which is becoming very important with 2/3, and maybe it'll even grow further. And I think that needs to be, understood very well. On the other side, we continue to see that the competition on the own damage in terms of pricing aggression is continuing in the marketplace. There are players who continue to want to be more aggressive, and to that extent, motor insurance largely continues to be a commoditized play. So fraud continues to be very rampant in the motor insurance. That's one of the challenges of the industry. And there is obviously, Mr. Sarma pointed it out very briefly, but in terms of the cost of spare parts, labor, TP awards, I think that's something which continues to go up. So I think these are all very quick summary of all the challenges, multifaceted challenges which we face in terms of motor insurance. A little bit, not to paint a very negative picture, to make a few comments on certain positive developments as well, if I may say. So one is, I think we have been getting, the industry has been getting, as per some formula, third-party price increases regularly for the last 5-6 years. Though current year has been a challenge, because the regulator was not able to do that because of the pandemic. But that's something which has been happening. So, which is the good news. The other good news is, due to the pandemic, the retention rates overall of private car insurance have gone up. And that is linked to, one, the companies, making being much more efficient and more effective and making more efforts. Also, somewhere I feel, my understanding is, the customers are more risk aware, and they are, kind of more comfortable. And, we've having a lot of flood situations and a lot of situations, and the customers are, also, doing it. So I think retention rates, have gone up. Recently, there was a report from IIB, Insurance Information Bureau, in terms of the under penetration of motor insurance. It was very, startling. The numbers, if I may, quickly recall the numbers, that about 2/3, 65% of two-wheelers in India are uninsured. 10% of passenger cars, private cars, are uninsured, and 40% of commercial vehicles are uninsured. So this is the brighter side of the picture, that continues to be, in terms of number of vehicles, a very significant amount of the population of vehicles which continues to be uninsured. And it is a matter of building more quality distribution, digital or otherwise, to be able to cater to this. So that is again my comment, that as more and more distribution is becoming digital, whether it is sell online or buy online, I think a lot of these uninsured vehicles will keep on coming into the fold of insurance, and hence the segment, will become healthier. The other thing, which so far very little has been done in terms of in the industry, is in terms of the cross-sell opportunities. I feel as insurance companies and distribution channels become more digital, I think there would be a lot of, we all are aware, that anybody who owns a vehicle is one of the better profiled customer of India. And hence there is a very significant opportunity to do cross-sell, whether a cross-sell of health insurance, COVID insurance, home insurance, or any other product. Very little has been done on that so far. And that again, I think represents a very large opportunity. There are the quality of the data ecosystems in the country is becoming much better, whether with Aadhaar, eKYC, IIB databases. And again, if the industry, distribution, everybody comes together, I think, we can make much better efforts in identifying the fraudulent pockets. There are these pockets of fraud, and, people who come together and, create frauds in motor insurance. We can, come together and, do that, which wasn't possible earlier. The other thing which is possible now is the quality of the data which is available. the information which is available, you can potentially, we can get insurers can get into much more customized underwriting. Historically, motor insurance, why it has been commoditized, because every customer, has largely been painted with a single brush, because, you have been looking essentially at the asset pricing, asset underwriting, so if you got a particular make and model of in a particular city, just get this thing, same price. So today, I think there is an opportunity to start differentiating, various customers based on, your, whether credit score, whether, your driving history, your asset details. I think that is something, which becomes, very interesting, because, we can do much more customized underwriting. And the last point, I just want to leave with you guys is the entire theme of digital and innovation. So I think, now as part of the sandbox, I think a lot of companies are trying some very interesting models like pay as you drive, like floater insurance in motor insurance. I think, so these are, I think, very interesting innovations, and I'm very happy, that the regulator has kind of been very open to these sandbox ideas, and some of these innovations are being made, and I'm sure some of these will become very big ideas. And last but definitely not the least is the entire theme of digital. Digital needs to digital and innovation, if I may say, and both are kind of the two sides of the same coin. Whether it is in terms of products, whether it's in terms of claims, or whether it's in terms of distribution. So I think digital is going to disrupt the entire motor insurance segment. So whether whether you got a device, OBD device, or through your app, figuring out a pay as you drive, how as you drive, and bringing customized solutions, or you're doing digital distribution, or enabling your channels, brokers or agents or MISPs, dealers, to they sell customers motor insurance digitally. Or even one of the biggest areas of innovation also can be claims, because claims has been fairly has been can somebody just please put your mics on mute, please? So claims is again, which I feel, can be disrupted in terms of the way it's happening today. It's been a very traditional way, the way the claims have been getting settled. I think in terms of, real-time claim settlements, the low complexity claims, being handled on a real-time basis, the customer having the flexibility to go to wherever, whatever garage or workshop, they want to. I think that's one big area which I feel is ripe for disruption. So those are my few thoughts, so there are some challenges, but I also feel, parallelly, there are very large areas of opportunity, which if the industry comes together meaningfully, we are at the cusp, where this disruption can happen in terms of customized underwriting, digital disruption, and innovation. That's what, I have to share. Thank you for listening to me.
Thank you very much, Nilesh, for highlighting the challenges which our industry is facing, and at the same point of time, giving us the much needed solutions also. Would have loved to have you more today, but considering the time limitation, would like to move to the next speaker. But before we move, ladies and gentlemen, request you to please put your camera off and mute yourselves. We have had really good quality, renowned speakers from the country and abroad joining in this for the webinar, and your participation would be appreciated by keeping your camera on mute and switch off mode. Welcoming one of the leading insurance professional of the country, a very renowned name, Mr. Yashish Daya.
I don't know.
Mr. Daya,
इसमें कैमरे में जरूर सॉरी इसमें जरूर वो है ब्लूटूथ फोन में.
Can we?
Hi, Yashish.
Hi, Yashish. Welcome to the webinar. It means a lot to us at CII. Ladies and gentlemen, Mr. Yashish Daya. He is a co-founder and CEO of PolicyBazaar.com, one of the top insurance aggregators in India. And in over the last 12 years, Yashish has grown Policy Bazaar to become a key influencer in consumer decisions around insurance. Mr. Daya will present insights on what the future of motor insurance is likely to be in India. Over to Yashish.
Thank you so much, Yashish. Thank you very much, CII, for having me over and for organizing this event. It's awesome hearing all the views. Mr. Sarma, Mr. Nilesh, thank you. I have honestly very little to add in terms of knowledge of the motor insurance industry per se, in front of people like Nilesh and Mr. Sarma and a few others. But at the same time, let me kind of share what I feel. See, the motor insurance, and I largely look at the retail market. I don't look at commercial. I don't look at others. I just look at the individual private car market, so to say. And from whatever I have seen over the last 12 years, the market has not been growing. It's pretty flat. And if I recollect back in 2008, it was a very dominant part of the general insurance industry. But today, health is catching up really, really fast. And I feel health will become a larger part of the market fairly soon. I haven't seen that much growth, and that's also visible when you look at automobile numbers, etc. And of course, there's pricing pressure, and prices are going down. As I look at the consumer side of things, there are multiple places in which the consumer buys. Initially, the first couple of years, the consumer is buying from the auto manufacturers. After which, once he is out of the service mechanism of the auto manufacturers, he typically start either comparing online and buying online, or going to an insurance company's website, or working with the agent to purchase policies. I tend to absolutely agree with Nilesh. I think there's a lot of game in the third party, and not everybody appreciates that the real game in motor insurance, from whatever I can sense, has actually moved to third party. OD is, everybody is pretty much on own damage. Everybody is competitive. And while there are mechanisms to sniff out less risky customers, the benefits of doing so are very limited with the high discount rates, etc. The probability of sniffing out safer customers, or let me say non-fraudulent. See, we've seen both in the health insurance, life insurance, as well as in the motor insurance industry, as we look at data across the sectors, there's a small section of consumers, very, very small fraction, who you could classify as fraudulent, who would buy a policy when they know they're going to claim, make significant third party claims, etc. And they're part of various networks. Now, our job as industry players is largely to sniff those out and make sure they don't come into our portfolio. Thankfully, online has been pretty safe, and there's a clear reason for that. If I was doing something wrong, I need a bit of help, and online does not really provide you that help. And there is also a lot of disclosure, so the disclosure rates have been strong, and that has somehow made the third-party pool in the digital world extremely profitable. And I believe that's really where the game lies, in getting the profitable part of the third-party pool, at the same time being competitive enough on the own damage part, that one continues to get business. But for most of our partners, the game has moved on to claims rather than distribution cost. And the overall claims ratio, and the overall what we call a marginal operating ratio, which is the cost of claims and the cost of distribution, is becoming quite relevant. And the good news is most of the benefits are being passed on to the consumer in that situation. Sorry, my presentation's gone off. I did have a presentation, and I'm not able to see that anymore. Okay, so this basically says, you can look at the data, but basically says 17 to 20, pretty much the number of automobiles sold in India has been flat, which is very different to what you would see in a fast growing economy. But let's just move on to the next slide. Again, if you look at breakup of a non-life market, I think the changes are not as speedy as you would expect in a fast-growing developing market like India. Let's say if you were to back date into China 8 years ago, the kind of growth rates you would see there in the automobile consumption, etc., would be way higher. So I think we haven't quite hit that S curve uh, in terms of motor demand. And clearly, COVID is a short-term impact, but it has had a dampening effect on the entire insurance industry. Uh, I think there is it's a difficult one to call. Which way will the automobile industry grow? Of course, it should grow towards growth, but at the same time, there should be more use requirement for automobiles. But at the same time, through shared driving fleets, the utilization of cars is going to go up. And I speak for cars. I also believe for commercial transport, the utilization will go up. If you really think about it, a school bus drops kids to school and then picks up kids from school. What exactly is it doing throughout the day? I believe as modernization happens, as businesses develop, people will find more and more utilization from transportation. And there is, I would believe that on private car, at least, there is at least 80% non-utilization of cars, where cars just sit, they're not being used. So the Uberization of not just personal cars, but as well as commercial cars, I believe the number of cars is not going to grow very fast over the next 10 years. And that's a reality we should start to come to terms with, and plan for how we play in that reality. But anyway, everybody has their view, and I have one particular one. But if we go on to online is growing, it could grow faster, but yes, there is a 40, 50, 60% kind of year-on-year growth that continues to happen. I think the offline agents are operating and they have adapted well. But there is very limited value addition that is coming from being an offline agent. Eventually, for the claim, you have to deal with the company. And I think the future of competition I was to see is basically auto manufacturers and digital insurance. I can't see 5 years from now why somebody would be buying their car insurance via an agent. I also believe, and this is a fairly controversial statement I would make, I also believe a lot of the fraudulent element is abetted by the intermediary, because it can't really happen on its own. People are not so educated. Somewhere it takes the involvement of someone. And I think as we move more and more towards digital and more transparent processes and more sophisticated data analytics to identify fraudsters. Like, let me give an example. If somebody is salaried, if somebody's got a 750 CIBIL score, if somebody has got a health insurance which they have not claimed on for the last 2 years, if they've got a no claim bonus of some percentage, very unlikely that they are your typical fraudster. Even the type of phone people use has a big impact. So I think that there are way too many data pieces out there for us. So I'll give you an example, right? We just built out an algorithm for the life insurance industry and ran it over our sales for the last 12 years. That would be million plus life insurance policies. And we identified cases where we thought some level of fraud must have happened. And we shared it back with the companies. There was almost an 87% match. Now, can you believe that? And we had access to no claims data. We had access to nothing. All we were doing was conjecture. Types of income, agricultural income, small city, very quick purchase, etc., various pieces. So all one is getting at is that data is powerful and data can easily help you weed out fraud. And I think availability of data in any transparent channel, digital or tele, is very high compared to any physical channel where you can have a sort of comfort conversation, right? A comfort conversation with two people talking. They can talk anything is not recorded. There is of course lots of work happening. There is we've got the industry has a lot of products on the sandbox. but we haven't really seen success. So, all this pay as you drive, etc. Because the own damage component is so small, increasingly, especially for the older cars, there isn't a real play on pricing on the own damage. It's really, can you get better quality customers and make profits from third party pool? And hence the pay as you drive, which is largely a own damage product, according to me, does not have, but we've gone ahead and kind of got a sandbox approval and we're trying something. I don't think we've had even 100 sales or so. Or maybe we've had 100 sales, but they'll be pretty forced sales. 20 of them must be our own employees. Now, claims experience, there's a lot of investment going into claims experience because we do believe for the online world, having a superior claims experience is critical, especially with the public sector undertakings, because they were operating with a branch network and it was not a centralized framework. So having a centralized mechanism. So most of spot claims are happening through videos up to almost $2,000. And there's a lot of work happening on that front in terms of garage integration, garage aggregation, etc. And I do believe as an industry, we should all come together on this platform and have a single platform where, essentially claims can be assessed and paid and, the cashless service can be there. So the consumer draws a lot more comfort on the insurance industry. It just helps everyone, rather than kind of doing our own thing, each one. It just helps everybody to do that. So there's a lot of work happening on all these fronts, and I think that will keep evolving. But all in all, I think motor will gain a lot more through data access and weeding out fraud and being convenient to the consumer in terms of claims. I think open architecture would pass the benefit to the consumer. However, auto manufacturers will stay in power, and auto manufacturers do have the ability to control the insurance pie for the first couple of years, at least the first 3 years. And the profit pool will largely belong to the auto manufacturers. That part, I do not believe the cost benefit would be passed on to the consumers. Although I do believe there's decent service provided by auto manufacturers. So the service benefit is being passed on to the. See, it's not just about claims, right? So there is a decent service being provided by the auto manufacturers to the customers. But that's what I would have to say. Thank you.
Thank you, Yashish. Your insights have actually made us all think a lot, and I think it will be better and augment well for the future of the industry. It is indeed great to have your thoughts today. Moving on to the next eminent speaker, Mr. Vijay Kumar. Mr. Vijay Kumar is the CEO of GoDigit General Insurance Company Limited, and he also happens to be their principal officer. And the name itself speaks, an expert in the motor insurance industry in India. He has joined GoDigit in 2017 after completing almost 15 years plus in the exciting insurance industry of ours. Mr. Kumar will talk about how technology plays a significant role in facilitating motor business and ensuring customer satisfaction. Welcoming Mr. Vijay Kumar.
Yeah, good afternoon, everyone, and thanks, Yashish, for the introduction. And I would like to thank CII for providing this opportunity, to place our views on motor insurance. I think I also would like to, thank CII for, taking this opportunity to, conduct this kind of webinar, which was badly required actually, because we had slowdowns in the past also. There's a history, but this kind of slowdown, I think, is a new norm, is a new phenomena, and I think there are a lot of learning has happened for the all the industries, not only insurance industry, for everyone actually. So indeed, it is this slowdown was eye opener, and we really have to think about the challenges that we can face like this. And I hope this doesn't happen again. But in the meantime, in any case, we have to gear up to deal with this kind of situation. To start with a little bit of positive note, while the topic is slowdown in the auto industry and auto insurance. I think the main contributor to the auto insurance, that is the automobile industry, I think slowly has started regaining the ground now. Last month, I think July, some of the top manufacturers have posted a positive growth. Maruti, I guess, grew by 1% or 2%, I think, compared to last year, same month, and Hyundai also close to uh, uh, almost showing a flat growth. So things are looking good, and some of the new manufacturers like Kia Motors have really made inroads even during this tough time. They have the new brands have actually are the fourth largest now, or fifth largest now in the auto industry. So, but having said that, the dependence on auto insurance is huge at the moment. It may vary from small companies to big companies, depending on the business mix. But I guess um, this dependence, even during this tough time, the insurance industry has really been able to cope up, to large extent, I would say. So till June figures, as Mr. Sharma has shown, even though the auto industry has degrown by almost more than 70%, the insurance industry has not degrown to that extent. So for the insurance industry, it has been much lesser. So which means that the industry found some new opportunities and encashed on those opportunities to survive. While the current challenge is obviously because of COVID, but going forward, there could be many more challenges to sectors. It could be introduction of the electrical vehicles, which can also change the scenario. Yashish mentioned about the sharing mobility, also autonomous cars. I think the scenario could be far more different than what we see today, and we might probably because of these disruptions actually find some different scenario going forward, and accordingly the insurance industry will be impacted in case it remain dependent on the auto insurance. um, some of the challenges and learning from uh, the current slowdown is uh, the erosion of the premium has been drastic because of various reasons. There was more competition and discount has increased considerably, so ticket size reduced. The less number of vehicles coming into market, 20% business comes from new vehicles for most of the companies, which also almost vanished. Renewal, renewal, even though renewal ratio has increased uh, for some segments, private cars, but for the commercial vehicles, this has not happened. TP also has reduced because a lot of commercial vehicles, they did not want to go for even third party premium. Plus on the new vehicle side also there were deficit, and further the situation worsens because older vehicles, the sum insured is less, and as a result the premium ticket size also reduces. So
Yes.
Sir, good afternoon. This is Amit from the Chartered Insurance Institute.
Right.
yeah. So these are the few issues with regard to premium reductions. There are also issues regarding increased losses. Some people might believe that the less number of vehicles plying on the road may result into less losses, but situation may not be exactly same as perceived. Uh, the technology level, the kind of technology that is being introduced nowadays in vehicles, because there's a tough competition in the auto industry. So this is at the cost of high cost of spare parts and labor. While the vehicles are being sold at a cheaper rate, so the spare parts are supposed to make up those losses for the auto industries. And in the end of the day, it is the insurance industry which pays for those spare part cost. So the other, I think, one of the biggest issue that we face today, the premium ticket size has not gone up over the period. If you look at 2000 scenario where, or maybe prior to 2007, when the de-tariffing of the OD premium happened. So till now, already 60-70% depletion of premium has happened. Rates have happened. So we are still in a situation where the motor pricing is, the art of motor pricing is not learned. We are not in a similar matured market as US or maybe UK, some other developed countries. One of the reason is our pricing is primarily determined by OEMs, and they set the benchmark and then others follow. So the OEM pricing obviously is driven by there are certain different thought process which include the on-road vehicle price. So what Jashish mentioned in the last presentation, where we can risk rate the risk as per the risk perceptions, that actually is not happening. So there's a pricing is a major issue. We still to learn that, and like other markets. The other I think element that comes into the losses are a lot of frauds are also happening, because like commercial vehicles, quite a few customers are not able to pay their EMIs, and as a result, they try to cover up, the financiers and the customers actually try to cover up in certain fashion, which are which can be placed in the category of frauds. Management expenses also gone up, because for the same premium you have to service more number of policies, more number of claims, and garages also, because due to slowdown in the auto sectors, the dealers and the garages actually want to make up their losses fast and post profits. So as a result, they have resorted to the short-term measures like increasing labor cost and increasing spare part cost. So in last, I think 3-4 months, as high as 15 to 20% increase in the labor cost has increased actually. Then the other issue is the partners' income. So which is because we all depend on the agents and MISPs and other partners and brokers. Unfortunately, they're because of reduced ticket size and less number of vehicles, they are also adversely impacted. So the customer complaints also probably can go up in these kind of scenario, because for insurance companies to build some more checks and balance in the underwriting stage, at the claim stage, sometimes the customer doesn't like it, and may result into these kind of complaints. Then the increase in the management expenses, which I mentioned, because due to reduction of premium and increase in the cost, manpower and other rental cost, the management expense ratio actually goes up, and as a result, the stress comes of the solvency and the combined ratios. Employee retention is also become a challenge in these kind of scenarios, where because of high management expenses, there's a possibility of pressure coming onto the management to perform or to deliver more than the previously, and also probably at these during these such times, I think paying the same kind of compensation which were paid in the past may not be possible, and retaining people also become a challenge. So we try to, I think the solution lies in two areas where industry need to work, or industry probably must be working already. One is obviously use of technology more and more, so that uh, uh, you can reduce your expenses and increase the efficiency. And the second one is look for more opportunities. So these kind of slowdowns also provide certain opportunities which the companies can recognize and build their business, even though the auto industry is not performing. So some of the innovations that we have done on the IT side, I think, is just shown on the slide. Primarily on the policy side, I think when we say digitalization, the whole objective is to make life easy for everyone, be it customer or partners. API integrations, or maybe apps, or maybe Excel batch through robotic process, policy issuance through robotic process, etc. On the claim side, also because the reduced premium ticket size, it is very, very challenging to deliver claim service at lowest possible cost. So one of the example that I can just talk about here is automated proactive travel claim. Can we just keep it to the previous slide, please? Previous one. Previous. Previous slide, please. Go back. Go back. Yes. Now go back. Go back. Yes. The automated proactive travel claim settlement for flight delays. So this is a very classic example where for a low ticket size product, we could deliver a claim service to the customer without even any kind of intervention. So this is primarily based on the blockchain, where the airline data is integrated with the policy data, and whenever the claim happens beyond 75 minutes, if the flight is delayed, the intimation goes to the customer automatically, and the customer can submit the details through the same link or through SMS, and the claim is settled. So there is hardly any manual intervention in this. Similarly, on the motor claim assessment also, our percentage of motor claim assessment online through video streaming actually is more than the offline. I will share some figures in the next slides. Similarly, on the mobile claims, we just send one link where the phone is identified, and phone is diagnosed whether it's a damage or it's some electronic fault in that, and accordingly the claim is settled in no times. Okay, next slide, please. Next slide, please. Yeah, these are the few things which went well for us. For last, I think 4 months, our offices are virtually closed, and majority of the people are working from home only, and without any interruptions, without any increase in the customer complaints or any dissatisfaction. Our claim settlement, remote claim settlement, has gone up in these during this period from 77% to 84%. Break-in inspection also has gone up from 60% to 74%. And in terms of opportunity to experiment with some new products, actually we were the first to launch COVID insurance, product, looking at the current scenario that we have, so that the customers are helped, and in a way we also contribute to the society in overcoming this pandemic. Next, please. Yeah, so we also maintained our growth during this period. Overall market share we maintained at 2.6%, which is slightly less than the first quarter, but of course in motor, and due to obviously new vehicle sale declining. But overall, motor plus non-motor, I think we have maintained our market share to 1.54% during this period, which is better than the previous. Yes, next please. Next slide, please. So in terms of customer satisfaction, NPS also, we have been reasonably able to maintain our standards and SLAs. Next, please. Next slide, please. Yeah. So that's a bit of introduction of Digit. So having said that, I think just to I'll take 2 more minutes to talk about the future. I think, as I said, we have taken baby steps as far as the motor insurance in India is concerned. I think industry has not matured. We still don't know how to price motor insurance, and the regulatory. I think there are also certain limitations from the regulatory side which need to be looked at. Today, I think everybody talked that we need to give some more discount and pick up some good customers and charge a higher premium for bad customers in the own damage section. But unfortunately, the way things are today, I may give a hefty discount to a customer, assuming that he will not make a claim, but there could be a third person or third party vehicle which will come and hit that poor customer's vehicle, and there could be a claim. So this actually doesn't work. So unless we have a knock-to-knock agreement going on, I think our pricing in motor will never improve. Will continue the way it is today. And another disruption I foresee in the near future, which can happen, could be because of de-tariffing of the third-party premium. I think there's a lot of support as of now because of third-party premium. But if we compare with the own damage experience, where compared to 2000 or pre-2007, 60-70% of the premium has premium rates have been slashed. So I see similar scenario also happening in certain segments or for some customers. Of course, for other customers, bad customers, the premium will go up, and for good customers, the third-party premium may come down actually, which is also desirable. And this is something which will, I think, is important from society point of view also, because insurance contribute a lot in bringing in some kind of discipline in the society by charging higher premium from the bad owners or drivers, and lower premium incentivizing those who drive very, very gently. That's all from my side. Thank you very much.
Thank you, Vijayji, for your insights and perspective. It was really beneficial. And,
yes, I'm sorry, in between, this is Sainesh Dar here from the Chartered Insurance Institute Mumbai office. So very thankful to all the speakers so far. I just needed to, share a couple of thoughts right now. It's been a very invigorating session till now. I mean, I must thank Ms. Shan Fisher, Mr. Nilesh Garg, Mr. Yashish Daya, Mr. Vijay Kumar, Mr. Sarma. We've had some fascinating listening. So just a real personal request while we go for the rest of the session, as Mr. Yashish Sampath so kindly has been making frequent requests, and I believe that maybe accidentally many of us keep switching on video cameras and audio, and at times that sort of disrupts and disturbs the speakers. So earnest request if all of you could be very mindful of this for the rest of the session, and over to you, Yashish. Thank you.
Thank you, Sainesh. I'm sure the audience will cooperate with all of us, and more the merrier in terms of the quality of the speakers coming in. Our next speaker is again a very renowned personality in the insurance sector in India, Dr. Sandeep Dadia. He is the CEO of Aditya Birla Insurance Brokers Limited, and he also happens to be their principal officer and working with them since 2011. He has strategically steered the company to being one of the top 5 insurance brokers in the country. And Dr. Dadia will share his views today on issues pertaining to soliciting motor insurance business and customer experiences. Welcoming Dr. Sandeep Dadia.
Thank you, Yashish, and thank you, CII, for giving me the opportunity to be here and express my views. So, I mean, motor industry in the first quarter has seen a tough time, but I'm actually from my DNA is I'm a born opportunist. That really makes me always feel passionate about what I'm doing, and I am personally quite bullish on the subject of motor insurance per se in India, because there is, and my friend Mr. Sharma shared. There are a lot of vehicles which are underinsured or not insured, and those will be one of the biggest opportunity which will be given to any of the insurance companies or the intermediaries. And like my other colleagues mentioned, when the industry comes together and for the benefit of the customer, I think overall we are going to see a huge growth and upside in the next few years to come. So I have some perspective about, I've been asked to speak for the next 10 minutes on what is the role of an intermediary or a matured broker in this entire motor piece. So I'm going to talk about and highlight a few of the snapshots of what a broker is doing in this entire piece. Can I go to the next slide, please? So this is the philosophy at which we work at our company. And this is a famous statement from Mahatma Gandhi, that our customer is the most important to us. He is not dependent on us, but we are dependent on him. He is not an interruption of our work, but he is the purpose of it. He is not an outsider of our business. He is part of it. I've lost the slide. Yeah. We are not doing him a favor by serving him. He is doing a favor by giving us the opportunity. So our belief is very simple and very clear, that whatever the challenges we face, the moment we stick to the customer centricity, we find a solution. We digitize the solution and the world calls it innovation. So our basic philosophy of any growth in any part of our business, inclusive of motor business, has been customer centricity. So just to give you a brief, what do we mean by customer centricity and how do we, customer is basically the policy holder in insurance parlance. So how do we deal with this word customer centricity? So there are, we initially, and we would recommend all of the people, keep your ears close to the ground. So the kind of feedback we receive from the ground level at the execution level is something which we try and implement on a daily basis. So there has been a lot of tweaking in our processes and the systems based on the respect and the request of the customer. That has helped us in grabbing more and more customers. And just to give you an example, today we are doing almost 17 to 20,000 policy issuance per day on a motor policy. So that makes it nearly around 6 lakh policies a month. So that has been the kind of volume which we are able to generate because of that. We are a completely customer focused leadership. So in fact, we would urge in any person working with us here, we are purely customer centric, and leadership also talks only of customer first. So if the customer is served well, I don't think we will ever lose a customer. And that's one of the reasons that, we have been blessed with higher retention rates of the customer across so many years. And of course, the designing experience. So all these put together, the empowered, the field force, the customer focused leadership, and the matrix, the way in which we measure our matrices to manage the customer demand and the need, actually has made us the customer centric organization. And this is the chart which we follow regularly in our organization, so that we are able to deliver what a customer demands and expects. So can I go to the next one, please? Can I go to the next slide? Am I audible? Hello.
Yes, Dr. Dadia, you're audible.
Yeah.
We'll be just setting the next slide. Meanwhile, your more perspective.
Sure. So I'm just going through one simple diagram If the slide is on, it will be helpful for me. Can you see that? Yasesh, is this clear?
Yeah, it's clear.
Yeah. So I will just mention the role of a broker in this entire. Role of a broker in this entire game? So in the intermediation space, a broker is the one which is one of the most he can work with all the insurance companies, and of course based on the meritocratic approach he will select the insurance company to be dealt with the MISPs, which was the regulation which was driven by the regulator in 2017. I'm sure the regulation has helped all of us in streamlining the entire process. There has been a small heartburns at multiple levels, but I think these are the teething problems, and I believe in due course of time these issues will get nicely resolved. So an overall IT support, and what I mean by IT support is there is almost 100% automation on the sales process, which a good broker or an intermediary has achieved in terms of selling a motor insurance policy to the customer. The entire policy servicing, so that's more of a sales aggregation, but the entire policy servicing also has been driven through these systems by way of endorsement management, and at time of a claim, the claims management through the claim intimation, and then going to the insurance company's side, the side of the broker, which is linked to multiple on the claims side, intimation, appointment of the surveyor, and several other aspects. So entire policy administration piece, entire renewal piece is being managed now very well by the intermediary with using multiple technologies. And there are certain futuristic technologies also which are being used in terms of the payment facilities or the payment payment mechanism, or using newer tools of renewals through the SMSs or the WhatsApp integration, a two-way communication WhatsApp solution which drives higher renewals, and it helps the consumer to renew their policy online with a click of a button. The grievance management has been managed by the intermediary pretty well, and this grievance actually, the number of grievances, if you see the GIC handbook, also has come down significantly from 2011-12 till 2019. The newer data is not available, but if I'm able to recollect the number properly, I think the 90,000 number has come down to around 12,000, which has been reported to the regulator. And overall, the insurance companies' grievances are also coming down. And here I would definitely give the credit to the technology and the technological integration with the insurance company, the intermediary, and the MISP put in place. So their system, which is linked to the broker system, which is linked to multiple insurance companies' system. And of course, now the claims automation, which has really helped us to progress in the right direction. So there are multiple other functions which are also the broker is conducting at the back end. The compliance management completely for the broker, and of course, because the systems are there and MISP now being a new intermediary recognized by the regulator. So the entire compliance of those people also, the brokers are helping them to frame their own systems because they are new entrant to the regulatory environment. So a hand-holding on the compliance mechanism, and there are nearly 30-40,000 odd MISPs in the country. So it becomes very difficult. It was challenging for the regulator also to manage them, and it is challenging now for the broker or the insurer to make them compliant. But having said that, a regular training and development is taking place amongst all the MISPs to up the bar and to take the motor insurance business to the next level. The broker is managing nearly around 15 to 20,000 payouts per month to these MISP as their remuneration, which is allowed by the regulation now. So, and the complete back office management to that extent that many of the dealers which are not compliant from a GST standpoint, also the intermediaries of good repute have really helped them out to manage their own GST, make them file GST on time, helping the government and allowing them to grow in a reasonable regulated manner. Facilitation of the surveyor appointment, the claims management, the product support, the product innovation, multiple APIs integration with the insurance companies for newer products are something which are really interesting job which is done by a good broker. So the role of a broker is increasing big time. Of course, because there is a shrinking in the premium which has taken place over the period of time in last couple of years, the remuneration of the broker has gone down substantially. But having said that, these are all transitory phase, and I think the moment the broker's role enhances, I think the remuneration is going to follow. So there are multiple, and as many people mentioned here, regulatory sandbox, and I believe there are sandboxes on the claims also which are being allowed by the regulator, and they will definitely liberalize the claims management systems in the future. There are many brokers who will also roll out a service aggregation model, which means like you are you're doing sales on a single platform, you'll be doing servicing through a single platform. So that is something which many of the intermediaries are looking forward to giving an end-to-end solution to a customer. Many of them will be through an assisted model, or many of them will be through a self-service model. Time will prove which model is going to be better. But having said that, I think all these models are going to definitely increase the customer experience. The newer product of pay-per-use and all, they're definitely the flavor, I mean, at least the future flavors of the market. How much will they take off? Time will prove. But yes, at this time, at least the biggest opportunity for people like us lies in renewal market, or the market rollovers which are available in the market, which are untapped by most of the people, the rural population, or many of the urban population also, which do not have a complete policy. Third, 3-year policy, we were a firm believer of 3-year policy, but unfortunately that has got discontinued, which may create some problem for the customers who like that product. But having said that, I think with this automation in place, with the payment mechanism of the policy, or the auto renewal mechanism of the policies, this will be very easily tackled, and the problem will be definitely solved in a much better way. So coming to the tech framework, which most of the brokers are using it, because without that, the quantum of volumes generated by the brokers is not going to be possible. So as I mentioned, there is definitely an underwriting which is done by an insurance company, but the system is fully integrated with the broker. So the entire proposal comes to the broker, and insurance company system will give a predefined or a pre-underwritten product quote to the insurance broker system, and the client can buy the policy online with immediate effect. So I think in a couple of minutes, the policy is issued to the client, and it is there in his mailbox. Of course, when it comes to the management of the MISP, or as well as the expectation management of the customer, there are multiple system extension which has been provided in our systems, which takes care of clients' grievances and their servicing completely. There is a huge core centralized data management facility which has been established by many of the matured brokers, and there is a seamless integration with multiple partners who are actually multiple stakeholders in the company. And of course, we do face a problem where insurers' technology, that is the insurance company's technology, and the broker's technology don't match. The API integration takes a little longer time than expected. But I think, again, I would like to believe that these are part of the integration, or these are part of the teething problems. And once the industry matures, once the system also matures across, I think these integration will take definitely a positive role. There is a lot of work done on analytics. There is a lot of work done on the robotic process automation by many of the good intermediaries for claims automation, or endorsement automation, or reconciliation of the systems, payment to the MISPs, without which these kind of volumes would not have been possible to be handled. If you realize, the electronic policy was introduced some 5-6 years back, but there were matured brokers and insurers who were issuing these electronic policies since last 10 years plus. So definitely there has been a huge advancement in every technology. Many of the brokers have now established, or intermediaries have established, the WhatsApp communication, the chatbot model, and there are multiple dealer workshop locators which are available in the system. So when a person meets with an accident of his vehicle, he need not go anywhere, he need not call up anywhere, just switch on his mobile and just see where the nearest garages are. In future, we'll be able to give him the multiple support through those systems to reach those garages and book their appointments. There are AI tools and machine learning tools to manage the image analytics for the claims to be managed in future. And like many of the companies who have started doing it in US, I also do foresee a time in just a couple of years, so that our claims, at least the claims or the customers going through us, will be able to get their claim settled in a couple of minutes. I mean, currently we are talking in a few weeks or a few days. We see a time that in a couple of minutes the claim may get resolved and settled. So these are the technological advancement which will definitely help the motor industry to grow further to a larger scale. So, of course, the motor industry would form and will continue to form one of the biggest contributor for the general insurance sector. The moment the third party, gets streamlined, the insurers start making lesser losses, or when they are able to predict their own losses, I think they will also be very aggressive in coming out with multiple such products. And in future, I do believe that the modernization or the reforms which will come to the industry, where like a Western country, the brokers may be allowed to form their own product, make their own product and roll it out in the market, finding an underwriter to support the product. I mean, I think that's going to be a dream, and that is going to be the next future in the years to come. So I think with this, in a short time, I would like to I wanted to elaborate what is going to be the role of the broker and what is the role of a future broker. I think it's very clear that all of us are going to be staying together and growing the market together for mutual benefits, and being customer centricity keeping in our mind at the center. So with this, I thank again CII for giving me the opportunity.
Thank you, Dr. Dadia, for giving us great insights and making us all learn a trick or two for doing the business in the current scenario and in the coming future. Now, few words from the Chartered Insurance Institute's officials. Our next eminent speaker is Mr. David Thompson. He is the International Director of CII. Mr. David Thompson is based in Dubai and is responsible for the development of the organization outside the UK market. We welcome Mr. Thompson, and he will briefly introduce what is CII and what role does it play internationally.
Thank you, Yashish. Hopefully you can hear me well from the Middle East. Certainly we heard Sean a little bit earlier on. The temperatures, I'm sure, are a little bit hotter here, even though I know it's very, very warm in the UK. So, yeah, thank you very much indeed. I am the International Director for the Chartered Insurance Institute. Absolutely delighted to be with you all today. Can I just start by thanking all the presenters and distinguished guests we've had so far. Some absolutely excellent comments by all. In the next sort of 10 minutes or less, what I would like to do is introduce you, or maybe reintroduce you, to the Chartered Insurance Institute. Then I'd like to talk a little bit about some of the work that we've been doing internationally more recently, and a few things that are coming up. And finally, I'd like to mention the motor qualification that the CII has specially developed for India. But actually, I always like to start with a quotation, and a quotation many of you will recognize, not from your part of the world, but this is the quotation for me, definite favorite of mine. So, education is the most powerful weapon you can use to change the world. That came from Nelson Mandela, and as I say, in terms of what we're doing here today and the launch of a new product, I think it's absolutely right and fit and proper for today. So the next question is, who are we, or who are the CII? Now, many of you will know the CII for a number of years. Some of you may be very new to the CII, but just to give you a very quick whistle-stop tour of the CII, we go back to 1873. Obviously a long time ago, way before I was born, well, a little bit before I was born. All started in Manchester, the Institute, the Insurance Institute of Manchester. The CII is the leading world's professional organization for insurance and financial services. We were granted the Royal Charter in 1912. From a membership perspective, we've got 127,000 members worldwide, and we operate in more than 164 countries. If we look at the membership alone, 13,000 of those members are outside of the UK and currently growing at a very fast rate of knots, and we're absolutely delighted about that. And in terms of where we are, where our offices are, well, our main hub, our main office is in London. We've got an office in Mumbai, and I've been there quite a few times, and we relocated last year, which was wonderful. We have an office in Hong Kong, and early next year we've been resident on the ground for the last 2 years, but we're opening an office in Dubai next year. So I'd like to just move on to some of the work that we've done within international over the last few years, and actually some that are just coming. If I can just start with the current pandemic that we're hearing about hour by hour, minute by minute. Well, the CII have got a coronavirus hub on cii.co.uk, and if there's anything you would like to know around the CII, please go to the website and have a look at our Corona Hub. It's kept up to date on a very, very regular basis, as you would imagine. Also, I'd like to mention the work that our new Director of Learning Assessment, Jill White, has embarked on, because she's doing a root and branch review of our qualifications, our content and our structure, and certainly some of the early signs that we've seen are truly exciting and will really pave the way for the CII going forward. Alongside the current development that Jill is doing, we're looking very much at digital first engagement, which I'm sure to people outside of the UK in different time zones is really important, because things like digital, we will in future not have to worry too much about physical course material, and we'll be able to accelerate the trends as our new operating model rolls out over the coming few years. I'd also like to mention our Goodwill Ambassadors. We've got 27 Goodwill Ambassadors around the world, but we've got 7 in your region, and Yashesh, you are one of our Goodwill Ambassadors, and I know that there are a number of other of our Goodwill Ambassadors on the call today, and I'd like to thank you for all the work that you do for the CII. It is greatly appreciated. The other things that I'd like to mention very briefly, because I'm conscious of time today, is we've recently launched the CII Group Shop, which now allows candidates to buy CII products online and services online in local currency. We're also in the process of rolling out remote invigilation, and this is already happening. It can take place anytime, anywhere in the world, no additional cost. And I've personally done one of these exams, and to me, it's very, very exciting. And we've heard many of our speakers talk about the future, the digital future, and I think this will be with us for many, many years to come. Very, very exciting. From an exams and assessment point of view, we'll be moving from paper-based to online. That's public as well as in-house exams, and we'll provide greater options and flexibilities to students. Couple of final things. One is that we're doing a big membership campaign within the Central and South Asia region to support our students and demonstrate the real benefits of memberships, and why people should not only join but remain as members going forward. And this campaign will continue throughout the year. And then the final one I'd like to mention is last year we introduced a World of series. A gentleman by the name of Lawrence Smith produced this in last year, and this year we've got the World of Promise, or a World of Promise, and I'm going to try and hold it up just in case you can see it. So hopefully you can see that. This is the hard copy, but you'll be pleased to know that the cii.co.uk website, you can get the digital version, and I can tell you there's some fantastic stuff in there, and many contributions coming out of your region. So I'd like to finish today, if I can just go on to the last slide. Actually, I'd just like to share with you a special date for me, which is the 21st of September 2018. And Sainesh, who's coming on in a minute, probably won't remember the date, but he will remember the conversation, because when I was in Mumbai, I said to him, what one thing, if you could only have one thing, what would you and your team want? And without hesitation, his answer was a certificate in motor insurance for India. So that was the start of the journey. And in April, we soft launched it due to the current pandemic. And today signifies a very important step where we officially launch the certificate of motor insurance. I'll allow Sainesh to do that, and I'm going to pass back to Yashesh. But can I just say thank you very much indeed for listening to me, and best of wishes to you all.
Thank you, David, for your kind words. And I'm sure the audience at large would benefit from the perspective of CII, what you have given to everybody. And they would love to be associated with the world's most respected insurance education body. I,
Yes.
Dr. Abhijit, are very much grateful too for being the Goodwill Ambassador for India, and we continue to do for the betterment of our profession.
Thank you very much.
Inviting the next speaker, as David has already said, Mr. Sainesh Dar. He is a Regional Director of Central and South Asia for the Chartered Insurance Institute. Sainesh, over the last 13 years, has spent an integral part for the CIO operations across South and Central Asia. Sainesh's role first involved setting up the CII's liaison office in India in 2007, and later a fully owned subsidiary company of CII, that is CIIFS, in 2011. May I invite Sainesh to please come over and give a brief insight about the new motor qualification course which is being launched.
So namaskar, good afternoon, ladies and gentlemen. It's a tough job coming in between David and the next speaker, Praveen Gupta. So I've always noticed that I'm strategically put between speakers so that, I lose my gloss. But anyway, as you can all see, I'm wearing a tie. And I was actually looking forward to meeting all of you in person. I mean, I was really looking forward to this event in its physical form. But just as our CEO, Sean Fisher, said right at the beginning that we all have to be prepared for this new normal. And I believe this new normal is here to stay. And so my delight remains as much in meeting all of you virtually. And of course, many thanks, Yashesh, for your very kind words and kind introduction. That's not very usual for me. So first of all, I would like to thank all the eminent speakers who spoke earlier today. And we all know that we are facing unprecedented times and multiple challenges caused by this coronavirus pandemic. So it was rather heartening to hear from the industry leaders their thoughts about the current situation and the roles that they themselves and their respective organizations is going to play in helping us prepare for the future. Now, these are uncertain times for sure, but I can see enough optimism going around that this disruption could actually lead to a much stronger and customer-focused world. Now, before I actually continue with some things that I wanted to share with you, I must tell you that I was lost in a trail of thought, especially on what David Thompson just spoke. I mean, when he was narrating that absolutely fabulous quote by Nelson Mandela about the role that education can play in this world, I immediately started thinking of our own Mahatma Gandhi, the father of the nation here in India, and also a mentor and somebody that Nelson Mandela looked up to all his life. And I thought that, Gandhi used to speak so many things on this line. And also in many of his articles and references, I could see this line repeat itself since my childhood, that the pen is mightier than the sword. And while David was finishing, I quickly Googled in my enthusiasm because I didn't want to be caught on the wrong foot. And of course, I was mildly disappointed because this wonderful line did not really come from Gandhi. It came from Edward Bulwer Lytton in 1839, I mean, he was an English author and playwright, and that was again learning for me. But this is something that I've really grown all my life about the role that education can play in connecting this world, in changing this world, and in taking us to a new tomorrow. So finally, just giving you a bit of background, which actually goes back more than 80 years and maybe even longer. We at the Chartered Insurance Institute London have always had a deep bond and association with the Central and South Asia regions in general and the Indian subcontinent in particular. We've also played a key role in the past in helping develop local institutes of learning and professional bodies supporting the insurance profession within the region. With the turn of the new millennium, we also have had the pleasure and privilege of working with almost all the important constituents of the insurance markets, be it the regulators, insurance companies, brokers, trade bodies, associations, training and learning centers, colleges, universities, most importantly, lots of young insurance professionals, and all with a united and common goal of raising professional standards in the insurance industry. So today I take personal delight in presenting to you the India Motor Insurance Qualifications, which has been specifically designed for the motor insurance segment. This journey, as David just mentioned when he was speaking, goes back almost 2 years, and I'm thankful to him for actually mentioning the exact date. But it was around that time when many of our partners and sort of clients had raised concerns and a specific need to have locally tailored qualifications for the India and surrounding markets. And it was also felt that since motor insurance segment had one of the largest components of the workforce catering to it, it was basically a strategic requirement to develop and attract the right kind of professionals, which would help reduce the existing levels of skill gaps in the industry. And of course, all of us should have to agree that a more informed and a more skilled workforce would automatically lead to greater customer satisfaction and a much higher level of customer experience. So finally, here we are, and I'm thankful to many of you and some of you who are attending this discussion today, and some of you who couldn't unfortunately make it. But there have been many senior professionals from the Indian insurance markets and across the region who have been instrumental in giving invaluable support to us at every stage, all kinds of feedback, all kinds of suggestions as we went across, developing this qualification, which to me now not only is local, but also most relevant and comprehensive in nature, which carefully covers all the essential features pertaining to the motor insurance market. So basically, let me just share some of the key features which I want all of you to consider. The certificate is designed to build knowledge, understanding and competency of key topics that surround motor insurance in India. And of course, I must add out here that a lot of that should also relate to surrounding countries within the Central and South Asia regions. And all of this has been done with an aim to develop the necessary skills, capabilities, and subject matter expertise required by insurance professionals today. Some of the features in brief. Number one, just an idea about the certificate. This basically requires the candidate to complete 3 units. Number one, motor insurance with its products and policies. Number two, motor insurance with claims and underwriting perspective. And 3 is basically the award in general insurance. So what it really leads to is that on successful completion of the certificate, the examinee would not only be oriented to all the aspects of the motor insurance markets, be it products, policies, risks, legal and regulatory considerations, claims and underwriting, but also, very importantly to me, is that it would also orient people with the structure and main features of the general insurance market. Point number two, which again is something which excites me a lot, because many of our learners and many of the people entering insurance are very young and not from insurance backgrounds. So people don't really need to just look at this certificate in totality. They're welcome to just do one single unit as a standoff qualification, and on successful completion of the same, they can still carry the CII award designation, which should really be helpful in differentiating themselves on basis of the knowledge that they carry. And also they can utilize the credits gained by the achievement of that single unit in the pursuit of higher CII qualifications. Third, and a point which again I'm repeating as David had mentioned, and a point which makes me feel a lot stronger today, is the fact that now with the launch of the CII shop, people are easily able to log on and purchase the qualifications, not only the motor qualifications, but many of our others online on the CII shop, and most importantly, in your local currency, which really, helps a lot of people do things in an easy manner. Point number four, of course, you'd be happy to know that since the launch right now is in India, we have more than 25 locations across India where the exams are available. And also something which is quite pertinent and relevant to the current situation, because India still hasn't seen its peak and the numbers of coronavirus cases keep going on. It's not very open. It's open and closed in many places. So in such a scenario, everybody gets an option to take the exam from the comfort of their home through our remote invigilation option. And I can assure you it's really good, because I personally have taken a few exams using that same mode. And finally, something which all of you should note, that a brochure containing all details of this qualification will be sent to each participant in today's session. We have your details, and we'll follow this session with an email to you carrying details of the brochure. And then I expect that all of you would help me and the CII in carrying the message forward as wide and as deep as possible. Finally, I would again like to thank all the attendees for taking out time to make this a successful session. And of course, I cannot leave out some of the very senior, very, very important people, as I had mentioned, because the CII, with its international standards, helped by local authors and subject matter experts, have all come together and put together this qualification. So I must mention by name Birla Institute of Management Technology, BIMTech, and Professor Abhijit Chattaraj, who also is our Goodwill Ambassador and is the author of certain part of the study text, and Madam Mahalakshmi Kanan, who's also been instrumental in helping us put together the study text. I also have to mention the fantastic CII regional team based in Mumbai. A big thank you to all of you for your endless hours of hard work. And of course, again, big gratitude to the CII team in London, all my colleagues there in exams and learning. And I know how much you've had to really work and prioritize things to actually help me deliver all this on time. And so lots of thank yous to a lot of people. And final words, I don't really have as reverberating a quote as David had, but basically I follow very simple words, that if insurance has to be proper as a profession and be seen as such by the wider public, we need to construct the fundamental building blocks of a profession, and those are supported on the pillars of a proper learning and qualification program, supported by an ethical code of behavior. And of course, we all have to sign up for continuous learning all through our life, because we have to adapt and change and take the industry higher. So big thank you to all of you, and over to you, Yashish.
A big thank you to you too, Senesh, for making this possible and being the instrumental to set up this webinar in association with our India team and the London team. Ladies and gentlemen, would like to welcome a veteran of the insurance industry, Mr. Praveen Gupta. He's an FCII and a former MD and CEO of Raheja QB General Insurance Company Limited. Mr. Gupta, in his nearly 4 decades with the insurance industry, has been in several leadership positions, and we all have interacted with him very closely. His roles were both in the public and private sectors, largely in startup and remediation functions. Inviting Mr. Gupta for the closing remarks.
Yeah, thank you, Yashish. I appreciate that kind introduction, and I'm really delighted that I'm here on this forum, something that we have all eagerly looked forward to. But before I go into the heart of the matter, as a champion of diversity, I must air my sense of observation. I wouldn't use any strong words. Other than Sean, we've not had any woman leader speaking today. So hopefully from now to then, whenever the next event is, we will make that correction. So diversity is important, not just to me, but to the CII. And let's be mindful. There are a lot of great women leaders, and let's hear their voices. And I think that will take professionalism to the next level. So thank you for bearing with me on that. Over to what I must say on professionalism. Now, basically, yeah, I've watched the Indian market for long enough and been in deliberations with friends who started with me some 40 years ago. And what bothers us is basically that from, say, 2000 or 1999, when the first company got licensed as a private company post opening up of the Indian market, the numbers have grown in terms of companies, in terms of the gross written premiums, in terms of number of people. But what's happened to the knowledge pool? The knowledge pool has shrunk significantly, and that's not in relative sense, but it's in real sense. So there is a problem, and that problem correlates directly with professionalism and trust. Two things that Shyam so passionately professes, practices, and ensures that all of CII does too. And I want to bring that aspect into the flow of things over the last 20 years. And like, I got a sense that some people still believe that the new normal is only a temporary new and it will go back to the old ways. And unfortunately, that itself kind of smells of a bit of nostalgia, but not the razor edge kind of a cutting edge of professionalism. So what really has happened is in these 20 years, motor, which was just a minuscule portion of the Indian market's GWP, has grown significantly. And it has grown significantly not just because car sales and car production and car demands or automobile demands went up, but also because of some of the systemic issues that have come into the Indian marketplace thanks to the meltdown in the property pricing, which is fire, engineering, etc., and other portfolios, including marine cargo, etc., which made motor a bigger component in a relative sense as well as in a real sense. And health has started running now. Now, to most people, first timers experiencing insurance, it's via the motor portfolio. And it's very important that we run the motor portfolio the way it ought to be run in a professional sense, because people are kind of making their impressions about insurance and the insurance profession from the way they see the behavior manifest in the running of motor business. Now, we see a lot of unethical practices, whether this is on intermediation, whether it's on payouts which are made outside the framework laid by the regulator, and lot many other things. Some of my eminent fellow speakers have brought in fraud time and again. And I guess that is a function of any market. It's not just a monopoly of the Indian market, but that needs to be flagged and addressed. So what we are seeing is the freeing of OD pricing and holding on to the TP pricing, which has serious implications, actuarial and otherwise, for the portfolio, for the well-being of the insurance companies, given that it is a significant portion of insurance business of any insurer, and also it is significantly retained on the net account of each insurer. So what is really going wrong while this is unfolding? So the focus primarily remains on the point of sale rather than on the moment of truth, something that is no rocket science, and I've been talking about it again and again and again for several years. But the point is, there's so many young underwriters, young professionals, or young people wanting to be professionals who need to be rubbed with this truth. So we're seeing this significant, kind of emphasis on the point of sale. And we need to bring in some energy by bringing in professionalism at the moment of truth point. So that's another area which requires a bit of a correction. Technology, a lot of technology has come in, and it's significant, from the times policies were typed on typewriters or policies were not typed on typewriter to the time when the first dot matrix printers came in. And I remember in my last employment, I had to visit many regional transport offices and government offices and banks to tell them that, yes, we are an insurer and this is a genuine policy. So what if it's on a font which comes out of dot matrix? But today, from there, we are seeing a significant shift. And that's what I want to say, that what happened in the last 20 years was slow paced. And what's coming, because the permafrost is melting. I'm using a climate change phrase, but the phrase is important because it's all changing so significantly that things will impact us, that is insurers, the customers, and the entire ecosystem much faster. So you brought in the tech. So where you call it insurtech, currently you have players like Policy Bazaar who are rank outsiders who've come into insurance. And then you will have intermediaries like Amazon getting into insurance. So the parlance today in the American market and many other developed markets is the Amazon moment of insurance experience, particularly in health and motor. And that Amazon experience is knocking our door, having already taken a stake in one of the newly launched private insurer. It's a matter of time before we'll see the scale, the speed, and the efficiency that this market had not seen. And that will put a lot of current form of intermediation under threat. You will also have a Tesla moment. So Elon Musk recently launched his own version of insurance, and he's also already getting into broking in many parts of the world. There's nothing stopping him from getting into insurance. And so immediately, you're seeing a rapid fire transition from a rank outsider to intermediation to the manufacturer grabbing the risk carrying and the manufacturing of insurance role. So the glaciers of insurance are melting too very quickly. And the only thing that can possibly keep some level of continuity in these times of disruption, when you can hold on to something that gives you credibility and retains trust, is qualification. And not because I'm a fellow of the Chartered Insurance Institute, but as a practitioner and having learned the trade the right way, I can only tell you how proud and how equipped I felt with that qualification. So I would say that please look at that qualification. This certificate is just a starting point. There's a lot more that you can do beyond it. And let's win back the trust. The last flag that I'd like to fly is the chartered status. So while we have quite a few chartered insurers chartered insurance practitioners in the market. We have yet to have a chartered broker or a chartered insurer. So I would throw a challenge and say that could we, in the next 2 to 3 years, pursue a situation where motor becomes the starting point. And we win back the trust that this market we need. Growth will come. It's bound to happen in a market. And professionalism is the secret behind it. And CII is definitely one such provider to your ambitions and aspirations there. Thank you very much.
Thank you, PG, for your wonderful remarks. But friends, it is not yet the end. We have some surprise news for all of you. But before that, would like to invite CEO of CII, Sean Fisher. Along with that, would like to invite David, our international director, and Senish. Request you to please come on the Teams and on a video mode. Sean, David, Senish.
Hello, Yashesh, I'm here.
Yes, thanks for being there.
Yes,
but would like to invite.
I'm here as well.
Okay, but we would like to invite one of the most surprise guests for the evening today. The name itself with the entire insurance industry, Mr. Nitin Dosa. He is the chairman of the renowned Automobile Association of India, that is WIA, and director of Dosa Insurance Broking Services. Inviting Mr. Nitin Dosa to share something very interesting for all of us.
Hi, everybody. Good evening. Are you able to hear me?
Yes, Nitin bhai, you are absolutely audible, and it's great to have you today.
Hi, good afternoon. Only 2 minutes to go for good evening. It was a nice session and very happy to be associated with the Chartered Insurance Institute. We at the WIA, as you know, the Western India Automobile Association is also celebrating its 100 years. And for those who are from UK, it is parallel to the RAC, what you have in London. So we are the largest association, automobile association in India, and we are very happy to be associated now with CII. It was also nice to hear eminent and veteran insurance industry leaders speaking today. And I hope that from now on, in the future, some webinar will be held. I have again to thank Yashish and his team for inviting me to this meeting. Thank you.
Sean, David, would you like to please give some thoughts on this association with WIA for CII?
I would very much like to say, Mr. Dosa, sir, you have a formidable reputation and you've been championing the best aspects of motor in the Indian market for many years, and many congratulations on the 100 years of your association, not 100 years for yourself, I'm sure, as of yet.
Yes,
but
that's
of
right.
course, we all wish you that you would get to celebrate that moment at some point, and hopefully we will all be involved in that too.
Of course.
So thank you so much. I personally found today absolutely amazing to hear so many eminent speakers talking with such authority about the market. And I would like to thank Praveen, who's always been very brave in championing and talking about both professionalism and, more latterly, but very passionately, diversity, which, as you can imagine, is a subject dear to my heart. So I would like to just thank everybody that's been involved, and particularly Mr. Dosa for surprising us at the end of this session with his very kind words. And I'm just going to hand over to David just for one last endorsement.
Thank you.
You're on mute, David.
Sorry, I saw the favourite word this year is you're on mute. Normally I'm not, so apologies for that. Mr. Dosa, thank you very much indeed for coming on today. As Sean says, 100 years is fantastic, and congratulations on that. Certainly, like Sean, I've been delighted with today's event. And to me, it signifies a new dawn, I think, maybe a new digital dawn in the region. And the association we have with you and the support you've always given us has been absolutely well appreciated. Thank you so much. And can I just say a final couple of words as well? Yashish, thank you so much for moderating today. I'm sure somebody else is going to say that as well, but thank you very much indeed. You've done an excellent job of keeping everybody to perfect timing. And with that, I'll pass over to Sainesh very quickly and then probably back to you. Thank you.
Yes, many thanks. Thank you, Sean. Thank you, David. Big thank you to Mr. Dosa, and I also had the personal privilege of having a very, very long and enlightening conversation with him week and a half back. So wonderful to see you, sir. And of course, I endorse again what David said. All the credit to Yashish for doing a fabulous job. It wasn't an easy one, and of course, we could see that we had, these ongoing challenges of technology. But then they all give a new learning. So Yashish managed things perfectly. So big thank you from all of us to you and all the speakers again, all the attendees. And I hand you over, to Yashish. Thank you.
Friends, we have had a lot of queries coming in today from all of you. It has been a houseful webinar today. More than 215 people participated. And in the chat board, we have already having queries. The CII team will reach back to you for your multiple inquiries on the motor certification course, which has already come in. And we shall also be giving back you the responses which we have posed in for the eminent speakers. But considering the limited time, we cannot have a live Q&A. But before that, would like to invite even 2 or 3 more speakers of ours who are already there with us from last 2 hours. Yashish, if you can please come online, along with Sri Vijayji and Dr. Sandeep Dadia, and talk a line or two about their views and their support for the CII motor course in India.
Hi.
So we have Yashish and Dr. Dadia and Vijayji with us.
I'm there, Yashish.
Yeah, Vijayji, your thoughts, please, on the new initiative of CII for motor insurance in India, and you being a motor insurance veteran.
Yeah, absolutely. I think Praveen and others have mentioned already. I think even though this line of business is the most dominant in the industry, but still in terms of knowledge, I think there is a long way to go. And as we move forward, okay, with a lot of other development happening, evolution happening in the motor business, I think the relevance will be much, much more, and CI will contribute, I think, in that respect to enriching uh, the sales team and the other people in the insurance industry. Thank you very much.
Thank you, Vijayji. It means a lot to all of us. Yashish, if you are there. We have Dr. Dadia also with us.
Yeah, no, it's very much around. Thank you. Thank you very much.
Thank you, Yashish. Dr. Dadia.
Yeah, no, definitely. Thanks a lot. And I do believe that this is actually going to be a great initiative. And, knowledge will only increase the professionalism to the best. So I think it's going to be, we definitely support this initiative, and let's look forward for a brighter future in motor insurance sector.
Thank you, Yashish and Dr. Dadia, for your kind words. And with this, we come to the formal end for this webinar today. It was a great success and a houseful, as earlier mentioned, and we look forward to organize more such webinars to promote professionalism and know-how in the entire Asian market, and just not restricting it to the Indian market. Would like to thank again on behalf of CII the speakers for today, Mr. M.N. Sarma, the Secretary General of GI Council, Mr. Nilesh Garg, CEO of Tata AIG General Insurance Company Limited, Mr. Yashish Daya, CEO of Policy Bazaar, Mr. Praveen Gupta, part of CII too, and a former MD and CEO of Raheja QBE, Mr. Vijay Kumar, CEO of Go Digit General Insurance Company Limited, Shri Nitin Dosa, Chairman WIA, and of course our other colleagues from London office and Dubai office, Ms. Shan Fisher and David Thompson, along with Senesh, Zainab, Amit, and the entire CII India team. We look forward to your such more support in the coming future. Look forward for your more enrollments and inquiry for the newly launched course. And with this, would like to wish you all in advance Happy Independence Day and Jai Hind.